So far we have discussed how to set up a new company file in QuickBooks and how to create new ledger accounts and how to edit the ledger accounts that we have created, and also how to set up new customers, new vendors, and how to set up new inventory items in QuickBooks. So during this particular session we are going to discuss how to pass a journal entry to record opening balances. So as you can see over here, so we are going to pass these opening balances through a general journal entry in QuickBooks. Right. So here the opening balances as of 31st December 2020 have been given. So we are going to do, so what we are going to do is we are going to pass these opening balances through a general journal entry in QuickBooks. Okay. So we are in the home page. To pass a general journal entry, we need to go to the company tab here, select it, and under the company tab you can see make general journal entries. Make general journal entries. You need to click on that. Once we click on that, we can see an interface like this. This is to pass journal entries. So this is the journal we are using to pass journal entries. So here first you need to give the correct date, right? So these opening balances are as of 31st December 2020. So you need to give that date here, 31st December 2020. Then right, we are going to provide these balances, but when providing these account balances we need to specifically exclude 3 account balances, right? We have created, as if you could remember in the previous videos, we have created 2 customer accounts with opening balances, we have created 2 vendor accounts, and we have created 2 inventory items. Therefore those balances, if you go to this chart of accounts, I will close this for a moment. If you go to this chart of accounts, you can see some balances, right? Account receivable balance is already there, inventory balance is already there, accounts payable balance is already there, right? Accounts receivable balance, debit balance of 900,000 is already there because we have created new customers with opening balances, right? The sum of those opening balances was 900,000. That is what is reflected here. And also we have created inventories. We have created 2 inventory items, so their balance was 525,000. That is what we can observe here. And also in terms of the vendors which we have created, the sum of those opening balances of the 2 vendors we have created was amounts to 1.5 million. So that is what you can see over here. Apart from these 3 accounts, we are going to pass the opening balances for the rest of the accounts. So when passing journal entries, right, after, so here at this moment we are passing the opening balances after we have created the new vendors, new customers, after we have created the vendors, customers, as well as the inventory items. Then these balances are already reflected there in our accounts, the account receivable balance, inventory balance, as well as accounts payable balance. So apart from that, now we need to create the rest of the opening balances. So when passing this journal entry, we specifically exclude these 3 accounts. And also, right, we need to be careful when passing these retained earnings as well, because it will automatically calculated in the QuickBooks application, right? So let's pass this opening balances through a general journal entry. Buildings, there is a debit balance of 1.5 million. Okay, to pass opening balances, that is possible through a general journal entry. So we need to go to company tab, select make general journal entries, click that. We need to select the relevant accounting date, right? In this case, that is 31st December 2020. Right. Buildings. Once you start typing, it will automatically appears. The first few letters, it will automatically appears. So here, under account ID 10,000, we have the buildings account. There is an opening balance of 1.5 million. So you need to give 1.5 million. In the memo, you can give opening balances as of 31st December 2020. Then we can skip the account receivable. I told you the reason earlier. Then we can go to this one, other receivables, right? You can go to this row, type other receivables. There is a debit balance of 20,000. In the debit side, you can type 20,000. Then go to the next row. We have the bank account. Just type bank. There is an opening balance of, sorry, there is a debit balance of, opening debit balance of 100,000. Then we have cash in hand account with an opening balance of 50,000. Cash in hand. On the debit side, we need to put 20,000. Then accumulated depreciation buildings account, credit balance of 400,000. Accumulated depreciation building credit balance of 400,000. These memos will automatically appear here. Then wages payable, credit balance of 40,000. Credit balance of 40,000. Long-term loan, credit balance of 400,000. Long-term loan, credit balance of 400,000. Stated capital credit balance of 800,000. Then we'll skip retained earnings for a moment. Then sales account credit balance of 8,000. Sales account credit balance of 800,000. Interest income credit balance of 20,000. Interest income credit balance of 20,000. Purchase account debit balance of 500,000. Purchase account debit balance of 500,000. Payroll expenses debit balance of 545,000. Rent expense debit 20,000. Rent expense debit 20,000. Depreciation buildings debit 50,000. Depreciation buildings debit 50,000. Then once you click on the next row, it will automatically appear a figure here, right? That is, right, when passing these journal entries, our debit balances should be equals to the credit balances. So it automatically, to make this credit and debit equal, we should pass a credit value. In this case, pass a credit value of 295,000. The account should be retained earnings account. That is why we have kept it here, right? Retained earnings. So you can see that is, in our case, in our trial balance, that is 250,000. But because of these impacts, accounts receivable, inventory, and accounts payable, right, it is reflected as 295,000 here. But with the amount that is already available in our accounts at the moment, it will be get equals to 250,000. Right. So this is our general journal entry to record opening balances. So once we have this entry, right, once we have given the required information, once we given the balances, debit and credit balances for the to record the opening balances of our accounts, then we can simply click on save and close. Save and close. Right. Okay. So now we have passed that entry. So now you can go to the chart of accounts, right? Under the company category, you can see the chart of accounts. There you can see for the assets and liability accounts, now we have the balances, right? If you go, for an example, I will go to this income account. So we have created those opening balances as of 31st December 2020, right? If I change the period to represent the 2020 financial year, you can see that we have passed a general journal entry to record the opening balance of 20,000. Right. Okay, so this is how you can create opening balances, or how you can record opening balances using a general journal entry in QuickBooks.